For the time being, let's take a break from the equity markets, focusing on the commodity markets. Manisha Gupta standing by to tell us all about that. Manisha.
Thank you for that, Nigel. Well, some resilience is what we are seeing in the commodity markets as well. After a knee-jerk reaction, especially after the US Fed announcement and statements, we've seen some buying come back in case of crude as well. So even after that decline, it still is holding around those 3-week highs. 0.5% down on your screens, but $95 per barrel is still holding, and we are inching towards that 96. Yesterday's high was 97, so off those kind of highs, but as I said, still holding on the higher side of the range for the crude oil prices there. Well, the US Fed did say that the ultimate level of rates will be higher than previously expected, and that is something that the markets will be readying themselves for the next 1 month, looking at various economic data. What the street will now watch out for, though, is the Bank of England monetary policy meeting tonight, with the expectation that you could be looking at a 75 basis point rate hike from them as well. But when you look at the Asian economic data, that has been on the positive side. So whether it has been numbers coming in from Australia, Japan, or even Singapore, the service numbers have been on the positive side. The crude price is also taking support from the European Union embargo, which is slated for December 5th on Russian oil. If that happens, you could be looking at some tightness in the global markets yet again. It also is about the Saudi Arabia sharing intelligence on possible attacks from Iran. So that a geopolitical premium also seems to be building up into the markets right now. But I also want to talk about the US crude inventories, which have continued to decline for a second straight month. That is adding premium to prices there. And when you look at the output, well, OPEC has said that they will cut output by 2 million barrels per day for the month of November. When you look at the October rate card or the report card, that tells you that OPEC is producing less than what they had agreed to begin with. So a shortfall in the month of October has been at 1.36 million barrels per day from OPEC, and within OPEC countries as well, barring Algeria and Nigeria, perhaps, you are looking at a shortfall coming in from various other OPEC countries there. So as I said, UAE is another one which is producing excess. Otherwise, all other countries, member countries within OPEC are producing lesser. Markets are anticipating the Chinese as an economy to start easing their COVID restrictions from March 2023. That demand could come back into the markets, and the Asian demand is expected to be on the stronger side as well.
Okay, you spoke about Bank of England, right? All set for a 75 basis points rate hike. After the Fed did it, Bank of England saying, I don't want to be too far behind, joining in the party. But, well, no jokes there. It's the biggest rate hike in 33 years that the Bank of England is all set to announce. But there is still a dovish tilt that they're expecting in the commentary. Let's slip into a short break on that note. But as we mentioned earlier, the big story of the day, the Fed chair has sounded more hawkish than expected. What does this mean for peak US rates, for the dollar index, the rupee and others? On the other side of the break, we have a special segment. It's The Economy. Lata Venkatesh will be in discussion with Steve Englander of Standard Chartered and Robert Sokin of Citi. Stay tuned.